Hey everyone, and thanks for jumping back into the Cryptoverse. Today, we're going to talk about Bitcoin, and we're going to provide an update to the bull market support band. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, and check out the sale on Into the Cryptoverse Premium at intothecryptoverse.com. Bitcoin has now gone up to almost 41K, and nice to see the dominance is also going with it. This is a general expectation that dominance should go up through the entire year as Bitcoin basically leaves a lot of the market behind, right? They just simply cannot compete in the same way, and therefore the dominance of Bitcoin goes up. So it is approaching 54%. My expectation for dominance is that it will likely break into new yearly highs, of course, sometime in the next few weeks, right? Probably relatively soon, but we are almost there. Now, as always, with a new week, it's worthwhile to figure out exactly where the bull market support band is in case there's a larger pullback. You have the 20-week SMA at around 31K, the 21-week EMA is at around 32,567. So essentially looking between 31K and 32.6K. That would be a pretty substantial pullback if it happened this week, but do note there's plenty of other levels to look at. For instance, the 8-week moving average, which is a relevant moving average to look at in trends like the one we're in now. You can see we kind of held that over here back in in February. We sort of got that move off the 8-week moving average, and also even in 2021 we would sometimes tag that 8-week moving average before continuing the trend. The 8-week moving average right now is currently coming in at around 36.7K or so. So not a huge drop from where we are right now. Speaking of, I mean, the move that we've been in has been impressive, to say the least, right? I mean, this is 7 green weeks in a row, potentially an 8th green week in a row. Of course, the week just started, so there's no telling what it'll be. And there actually are times in history where we did go more than 7 green weeks in a row. Like, there are times where we went 8 or even more, I think. So, sometimes the momentum can be a hell of a drug. The last few times that we had 7 in a row, I believe this is an example right here, 7 greens in a row. And then I think this is another one right here. And then this is another one right here, right? So like leading into that, right? So this was 7 in a row, 7 in a row right here, and then 7 in a row right here. And then on those 8th weeks, in these 3 examples on those 8th weeks, we did have a red candle. But oftentimes, even when we had a red candle, it still went higher than the previous week closed, right? So like this wick went higher than this week's close. This week here went higher than that close, and then even over here, this wick here went higher than the previous close. And I mean, we've already accomplished that this time, right? I mean, we've gone higher today than last week's close. So, I mean, even if this did go all the way back down to the 8-week moving average and then pop back up, it wouldn't be that dissimilar from prior times where we've had, this much momentum. If we look at the extension from the 20-week SMA, we can look at the short-term bubble risk. While the 20-week SMA and the 21-week EMA are moving higher, the price is moving quicker than the actual moving averages, right? So like it's moving up at a faster pace, and you can see that because this is the short-term bubble risk is essentially showing the extension from the 20-week SMA. You can see that it's getting further and further. And previously, we were about as extended as we were, back in January and February of this year, right? You can see right here. But now we've sort of moved above that, and we're not quite there yet, but we're almost as extended as we were back in March. In order to get that extended, we'd still have to go a little bit higher, but you can see that we're not actually that far away from that extension. There's a lot of different ways that we can look at this price action. I mean, the truth is everyone's trying to figure out where the top's going to be. Some people say the top's already in. Some people say it's much higher. It's hard to know. And especially when it exceeds expectations, it's easy to want to move the goalpost. And we can always look just in the context of history to see kind of how far this one went. If you look at the retracement tool, and you can see over here, what essentially happened is that we had weekly closes around the 0.5 retracement, the fib retracement, with wicks up to around the 0.618. If you take it from here, right, you can see that the 0.5 is at around 42K, okay? The 618 is all the way up at 48K. So that gives you an idea of where it would have to go if it were going to emulate what we saw over here. The other way to look at this, of course, is to say, what if you measure it from this peak instead of the second peak? What if you measure it from this peak? Where would it put it? And then that would put the 0.5 where we currently are. And then the 618 would be at around 46K. Now, it might be kind of silly to measure it from the first peak, but there are a lot of people, including myself, that thinks that the first peak was a more relevant top for Bitcoin. But I can also appreciate the second top too, because I mean, at the end of the day, price action is king, right? I mean, yes, there's 1,000 metrics that would have that basically said that this was the top, but at the end of the day, price action is king, and the price says that this was the top. So, I mean, I get both arguments. I just wanted to show both, just as relevant, just as relevant outcomes. I do want to briefly touch on, there has been some moves over here in gold. Gold has moved up recently. It actually put in a new all-time high. Again, it's pulled back a little bit now, so we'll have to keep an eye on it to see what it wants to do. But normally, if gold's breaking out, it can signify risk off, right? Not necessarily immediately, but it has historically signified that, I mean, it could imply that rate cuts are coming by the Fed, if the economy is starting to fall apart. And normally when rate cuts come, gold just continues to go up. But that is something that I think is worthwhile to consider, is that gold has seen a breakout here to a new all-time high, and it might get the attention of some types, certain traders who are looking for those, those signals. But other than that, I mean, currently our 8th green week, we'll see if it closes like that, still well above the bull market support band. To get a move back down to the bull market support band, I mean, we'd have to drop 20%, right? To get a move back down to the 8-week moving average, which again can be a relevant moving average in the sense that it has previously acted as some support levels in some of these prior trending environments, even over here earlier this year. The 8-week SMA is currently at around 36.6K, which isn't as big of a drop, right? It wouldn't be as big of a drop to get to 36.6. It's just about a 10% drop. And you might ask, well, what would cause Bitcoin to drop like that? Well, I mean, guys, there's no guarantee that it does. But if it were to, it could be assigned to all sorts of narratives. Maybe we get, non-farm printing negative. Maybe we get unemployment rate printing in the 4% range. It could be all sorts of things. But I would say keep an eye on the 8-week moving average in the event of a larger pullback. I think the most interesting thing right now is that in terms of, late cycle, like late business cycle by the Fed, where, we've seen a lot of rate hikes. They've been pausing for a while, average pause around 8 months, which would put the first cut in March if it plays out basically what it does on average. And what's fascinating is, again, we know that dominance of Bitcoin goes up typically during, especially late in tightening cycles, and it is going up, right? Bitcoin dominance continues to climb higher. And I'm guessing we'll continue this trend probably through the end of the year at the very least, and could extend even into next year. But it is approaching 54%. Bitcoin is already put in a new yearly high. My guess is that it's only a matter of time before Bitcoin dominance also puts in a new yearly high. And you can see that Bitcoin dominance has actually been holding support at its own 8-week moving average. So perhaps we'll see dominance break out to the upside here sometime over the next few weeks to hopefully take out these yearly highs. I mean, I'd have to get, above 54. I need to get above 54.35%, which I think it should have no problem doing. If you think about it, I mean, it moved from 52.5% to 53.4% in a single week, right? I mean, so if you just basically replicate that again, you're essentially looking at a new yearly high for Bitcoin dominance. So keep an eye on Bitcoin dominance, especially as gold is potentially starting to flash some warning signs here. And sometimes when gold flashes these warning signs, it doesn't mean like risk off immediately. It could be immediately, right? It could still be several weeks away. But because it's flashing at all, would sort of imply to me that Bitcoin dominance should just go up. I mean, I know the altcoin market, we know certainly that the altcoin market can run when Bitcoin does. Bitcoin has a way of sort of dragging the entire market up with it. But because the dominance is going higher as Bitcoin's going up, we know that Bitcoin is outperforming, the rest of the market collectively. Although there are many altcoins that are still outperforming Bitcoin collectively, alts are still bleeding back to Bitcoin. given the fact that Bitcoin dominance has just been a fairly impressive uptrend, for the entire year. So we'll see what the end of the year brings with Bitcoin. We sort of just covered some of those levels. And of course, there's also this level down here, which is the prior breakout point, which is something that historically gets tested eventually, although sometimes it can take months before it gets tested. But that's all the way back down at 31K. So again, right now we are almost at 41K. We've looked at some of the fib retracement stuff to just kind of show you where we are based on the two different peaks that you can measure it from. And yeah, we'll see if we get that full extension like we did in 2019 or how it plays out. Do note, by the way, that in 2019, when we got these long wicks to the upside, this is where dominance just shot up like a ton. So keep an eye on something like that playing out as well as we get into the last few weeks of the year. And, a lot can happen in a relatively short period of time. So, I imagine volatility is going to only increase over the next few weeks simply because, when you get momentum like this, a lot of people are just, they're just YOLOing in, right? They're throwing all their money, they're throwing a lot of money at it. And sometimes, it'll move up and then you'll wake up one morning and it'll wipe everyone out, and then everyone panic sells, and it just goes right back up. And that's what happened in mid 2019. If you look at some of these candles, right, it would just go straight up, come back down, wipe all the people that got in up here, wipe them out. Then everyone, then a lot of people sell, and then it just goes right back up. So you have to be careful, right? You have to be careful. That's why it's always worthwhile to have a plan when navigating cryptocurrency. My general plan with Bitcoin, as I've said before, is to just DCA when the risk levels are low, and then I DCA out when the risk levels are high. So it's all about where the risk levels are. Of course, you can come up with your own risk metric to use, but that is the way that I normally navigate the market. Anyways, we'll wrap it up there. We'll see what Bitcoin has in store for us this week. Thank you guys for tuning in. Make sure you subscribe to the channel. We do have Into the Cryptoverse Premium at intothecryptoverse.com. Sale is still going on. Make sure you check that out. Links in the description below. And I will see you guys next time. Bye.